Hey everyone, I'm Jeremy Szafron. This is Kitco News. Let's take a look at what's happening in the markets this week. The U.S. job growth for September came in much stronger than anticipated and expected. 254,000 jobs were added, well above the forecast of 150,000 jobs, and the unemployment rate fell to 4.1%. Now, this unexpected strength in the labor market is sparking debate about the Federal Reserve's next move. According to the CME FedWatch tool, markets are still anticipating a 25 basis point rate cut in November meeting. But with this initial economic data beating expectations, the Fed's decision is now less certain. As we turn to the crypto market, Bitcoin has been on a bit of a roller coaster this week. We saw it rally to about 66,000 US. We saw some profit taking, and today we see it back around the $62,000 mark. And while this volatility is a reminder of its unpredictable nature, long-term holders are accumulating and institutional interest continues to rise, painting an interesting picture for crypto's resilience heading into the next quarter four. So what does this all mean for the markets? And is Bitcoin positioning itself for another record-breaking rally by year end? Well, joining me today to break it all down is Joe Consorti. He is the head of growth at Theya Bitcoin. Joe, great to have you with us. Thanks for joining.
Absolutely, Jeremy. Thanks so much for having me on.
Well, listen, my friend, lots happening this week. We saw some interesting economic data. Let's start with that. Obviously, the U.S. jobs report showed this surprising increase of 254,000 jobs, significantly beating expectations. Of course, we have a lot of people saying, whoa, let's wait for the revisions to come from the Fed. How do you think that this influences, market sentiment, especially for risk assets like Bitcoin?
Absolutely, Jeremy. Well, for the longest time, you and I both know the going narrative was that the Fed was going to botch this thing and that we'd be in for a hard landing. I myself certainly ascribed to that theory. But over the last several weeks, what markets have been doing is they've kind of been chopping around a little bit, thinking that the Fed may have actually done this thing successfully. And what I mean by this thing is engineer the cycle for inflation to normalize back down to the 2.5% area where the Fed likes to keep it as its long run average without unwinding the labor market. Obviously, we had a couple of months there where the increase in unemployment rate was accelerating, but now we just had the first month where the unemployment rate actually fell from 4.2% to 4.051% unrounded, which is actually just 1 point away from being rounded down to 4%. So we have that. And then we also have non-farm payrolls, which greatly exceeded economist expectations. If you take a look at the Bloomberg's distribution of analyst expectations on a standard distribution, 254,000 jobs being added, that was a 3 sigma beat. That was 3 standard deviations higher than the mean analyst estimate. So needless to say, this jobs report blew everybody out of the water. And as a result, risk assets are loving it. Bitcoin is obviously now back above that $62,000 mark. And there seems to be a bit more clarity about what the end of this cycle is going to look like. Even though the Fed may be slowing down the pace of its rate cuts, the reality is growth is still strong in the United States, which means earnings are strong, which means risk assets still look like a buy, particularly as rates come down. Those less risky assets like U.S. Treasuries and corporate bonds may not be as enticing anymore, so people start to rotate into higher risk corporate bonds, risk assets like the S&P 500, the NASDAQ, and of course, our favorite Bitcoin.
Yeah, of course. I mean, like you said, markets rallying with this surprising news. We've seen some of this good information coming from the Fed before. We've seen significant revisions as well to previous month data, which turns out to be a lot less optimistic. The U.S. still grapples with high debt levels, obviously raising questions about the sustainability of this growth. But many are saying that we're just kind of seeing this temporary boost. We have an election next month, so that adds to it as well. But more specifically, Joe, how should crypto investors weigh this kind of economic uncertainty in their decision-making going forward here?
Absolutely, Jeremy. It's a good question. So crypto investors need to understand that Bitcoin and everything else that's associated with it are macro assets. And so the economic strength or weakness, particularly in the United States, needs to be factored in. Now, you talk about revisions. 14 of the last 20 payroll reports as of June were revised lower. But since June, in July, August, and now September, we've actually had 3 reports straight, barring this one because the revision hasn't come out yet, where it gets revised higher after the fact. And so it seemed like for a very long time, economists were overestimating the strength of the economy. And that typically happens during a cycle downturn. You get more misses than beats and lower revisions than higher revisions when the economy is deteriorating. But the inverse happens when the economy starts expanding once again. You start getting more beats than misses. And that's exactly what we've seen over the last 2 months on the payroll report. That's not to say it can't worsen again, but it seems like economic data is now beginning to surprise to the upside. One other aspect of this is the Bloomberg Economic Surprise Index. This is basically just a weighted index that shows on aggregate, is economic data surprising to the upside or the downside more often? And it just flipped to the upside. It just flipped into positive territory for the first time in 4 months. And so for the first time since June, now we're getting better economic data than is expected. It's surprising to the upside. And so if this can hold, if this can continue moving higher, that means U.S. markets, it's off to the races. We avert recession. The Fed is cutting rates into a growth rebound. Commodities are doing well because demand is very good. Different manufacturing and services reports are showcasing strong consumer demand. And so really it just means it's all off to the races. Recession averted. The Fed lowers the cost of capital. That means it's a field day for risk assets, Bitcoin included.
Yeah, Bitcoin included. I mean, we're seeing it rally today. It does make me ask, though, all this good news is coming awfully close to an election.
Yeah, certainly. And, I have spoken with some people about that. Obviously, the Fed is technically a separate institution, but we've seen historically that they do make decisions based on what the president, particularly the incumbent president, would like to have happen. And so a lot of people were saying that a rate cut should have come a lot earlier in the summer. Now you see that since the Fed is cutting into a growth rebound, a lot of people are arguing the Fed may have cut too early, which if you're making the argument that the Fed is a separate institution from the government, what the Fed did on September 18th by cutting rates by 50 basis points probably doesn't help your case there, because now it is really supporting the economic data. It seems that right around the time the Fed cut, growth really started rebounding. And so it is very conspicuous timing. I won't speculate on why it was so close to the election, but I think most viewers of this show may have a hint as to why.
Yeah, they do. And I mean, one of the Fed speakers was speaking this morning, Goolsbee, and he praised the job report, but again, warned that it's just 1 month. So I guess we got to be a little bit more careful looking at what they're going to be doing. Okay, let's go back to Bitcoin. I mean, we saw that surge past 66,000. Then took a little retreat. I think it hit 60. We're seeing some buying today, people entering the market. I mean, how do you interpret these wild swings? Are they just simply part of crypto's nature, or is it, more underlying trends here at play?
Certainly. So you have to break it up into two separate things. Bitcoin and crypto are, of course, macro assets. They're influenced by the global macroeconomy, the economic landscape, and other assets too. But they also have their own native factors that cause them to rise and fall, such as earlier this year in April, Bitcoin's supply schedule was cut in half. And so rather than 6.125, now 3.125 Bitcoin are being issued every 10 minutes. So that 50% reduction has an impact on Bitcoin's price inevitably. If demand stays constant and supply remains constrained, just basic supply and demand 101, the equilibrium price has to rise. And so typically after a halving, we see Bitcoin's price surge roughly 6 months after the supply schedule decrease takes effect. And now we are 6 months away from the halving. We're approaching the 6-month mark. And so Bitcoin has its own native reasons for why it chops around so much. But a lot of what has happened over the last 6 months, what has characterized these kind of volatile swings up and down, this really boring but choppy consolidation, has been a shift from short-term holders to long-term holders. And what I mean by that is everybody who has a Bitcoin that is less than 3 months old is considered a short-term holder. These holders are very prominent during bull markets. Think about this, when the S&P 500 is rallying and grandma calls you and asks if it's time to get in, that's an example of a short-term holder. Or somebody who you're talking to at the water cooler during work and they ask you about whether they should buy X stock or Y stock, that's a short-term holder. These kind of flighty participants that enter into a bull market because of the euphoria and mania associated with it. That's what drove Bitcoin to its all-time highs the first time around $74,000. That was driven by short-term holders coming into the market and holding more of that Bitcoin supply. Over the last 7 months now, what we've seen since early March, when Bitcoin actually hit this all-time high, is a redistribution from short-term holders to long-term holders, both as short-term holders sell to those longer-term holders that are older than 3 months, who are going to hold their Bitcoin for a very long time, but also coins that are growing up and aging from 3 months to older than 3 months. And so what this means is that this consolidation period has basically been a supply shift from more flighty Bitcoin holders to Bitcoin holders who are more price inelastic and will hold for the long run. So even though it's been choppy, even though it's been boring, it's very healthy because it's building out a strong base for Bitcoin to rocket from as we go onto this bull market continuation, which is in all likelihood going to happen in Q4, given where global liquidity is trending, given the global easing cycle, and Bitcoin's own cyclicality, with October and November being two of the best months for the asset.
Okay, well said. I mean, that was my next question. We saw that pullback, and would you say that we're looking at the early stages of a new bull market run? You're not really talking about turbulence ahead. What are some of the keys that you're watching for to determine if Bitcoin can maintain these higher levels or maybe even go higher, bust through the ceiling?
Absolutely. So number one, I'm looking for strength in the economy. If the economy can remain robust, that means the reaction to the Fed's rate cuts from risk markets will be a positive one. Look, every time we've seen the Fed cut in response to economic downturn, risk assets hate it. They start selling off. You start to see a flight to safety. Treasury yields come down as people pile into the bond market and out of risk assets. Bitcoin and other risk assets don't like that. So the first thing I'm looking for is to make sure that the strength in the economy can remain high. The second thing I'm looking at is the global easing cycle. Now, more than 60% of global central banks are easing. And in fact, the amount of basis points in rate cuts that are happening now is at the same level it was during the Great Recession. And so the economy, the global economy, is still in expansion, but we are cutting at the same pace as we were the last time we had a massive global recession. That's a very good signal to me. We're cutting while the economy is already in expansion mode. Financial conditions are loosening from already loose levels. And so that tells me, again, it's off to the races for risk assets. And the very third thing is global liquidity. So we're seeing global liquidity, which is the capacity of capital, balance sheet capacity, rise. This is balance sheet capacity on the United States government's balance sheet, as well as private balance sheets too. One of the big reasons this is rising is because of the pace of debt issuance, not just from the United States, but from other G7, G10, G20 countries. We are raising and issuing more and more debt than we ever have before. That debt needs to be purchased by somebody. It's purchased by private banks. And of course, some of it at the margin is taken in by the Fed. That expands the capacity of balance sheets because more collateral means more lending capacity. And so ultimately, that causes global liquidity to rise, and that causes risk assets to do very well. And so not only are central banks cutting rates, but balance sheets are expanding, and the US economy and other global economies, barring China and barring Japan, who has its own economic struggles, are in expansion mode. Those are the three things that I'm looking at that tell me Q4 is going to be excellent for risk assets. And of course, Bitcoin being a very highly sensitive, high beta risk asset stands to do extremely well heading into Q4 if all those conditions remain intact.
Interesting. Okay. Yeah. So some analysts are obviously saying that this is the most favorable environment for Bitcoin since 2020. It sounds like you share that sentiment here.
I certainly do share that sentiment. Obviously, you remember in 2020, we were cutting interest rates. Certainly during that time, it was in response to a recession and we were recovering from a recession. But arguably, because we're still in economic expansion here in the United States, it's an even more favorable environment for Bitcoin. I mean, look, financial conditions are already loose. Market sentiment is already very, very good. People are already avid risk asset investors. And so a further reduction in interest rates will only encourage more of that pouring out of things like US Treasuries and safer assets and into things like Bitcoin, obviously considered much more risky assets. And so I'd argue because of the fact that we're not in recession, we're cutting during a time of economic expansion, that it might even be more favorable for Bitcoin and other risk assets. The one fly in the ointment that doesn't make 2024 as favorable is that the Fed isn't actively buying assets from banks or quantitative easing, the thing that we colloquially understand as money printing. That's what we call it. That money printing isn't exactly yet occurring. If we were to get extreme weakness within the US economy, chances are we would see that direct asset purchase program like quantitative easing start taking place. But that's one thing that's not happening now that was happening in 2020. But aside from that, I would certainly agree with that, given what I've said with other analysts, that this is the most favorable macro environment for Bitcoin since 2020.
Interesting. Joe, when you take a look at what's happening around the world, geopolitically, of course, we've got lots of tensions happening, not only in the Middle East, obviously Russia, Ukraine. Could there be a risk that these short-term holders that you mentioned before start selling off in these types of market conditions if there is a downturn, or is it more of a solid foundation that we're seeing at this level?
Absolutely. So there's an increasingly solid foundation, but there's always a risk that people sell Bitcoin in order to jump into other more safe, traditionally safer investments. Bitcoin, of course, you and I understand it as kind of this apex risk-off asset. It's absolutely scarce. It's geopolitically neutral. So honestly, it's what you want to hold during times of geopolitical strife. Now, the market doesn't trade it that way. Unfortunately, if you take a look at correlations, Bitcoin is most highly correlated with the NASDAQ. Obviously, the stock index, that is very, very tech heavy. And so the market trades Bitcoin like a tech stock, but in actuality, it's supposed to trade like a hedge against not just monetary debasement, but because it's politically neutral and decentralized, geopolitical uncertainty as well. Kind of the same role that gold plays, right? People jump into gold not just for inflation concerns, but also for geopolitical concerns. You're seeing gold rally and do extremely well right now as a result of that. Bitcoin won't necessarily be the beneficiary of those flight to safety flows just yet, because it's still tightly correlated with tech stocks. I believe that as Bitcoin's market cap approaches the market cap of gold over the next 5-10 years, then you'll start to see Bitcoin trade like it should, like its properties suggest it should, which is this apex risk-off hedge, not just for monetary debasement, but for geopolitical uncertainty as well. And so there's that risk that because of what's going on, further escalations could drive a sell-off in Bitcoin. But that's the first order effect. The second order effect is further monetary easing in order to fund the war effort, and huge capital inflows to the United States because we are the world's superpower still. And that means good news for risk assets, right? And so the further monetary debasement and easing that would come, probably both monetary and fiscal, as a result of an escalation and potentially US involvement in a hot war, that would be good for risk assets as a second order effect. But of course, the fear associated with that would be bad news for risk assets as a first order effect.
Right. You know, you were talking a little bit about that S&P. We've seen a crazy run on the tech side, obviously, in the markets this year. But for crypto, too, you know, we had those ETFs being approved early in the year that it looked like we were all waiting for. Then, of course, we had the halving take place. Institutional interest is coming back. But we're also seeing increased interest from tech giants like Google, Microsoft, and blockchain applications. It almost seems like we're at this weird intersection of AI, blockchain, crypto. Talk to me about this transformative role in the tech industry moving forward. Are we just at the beginning here? It seems like it's going to be a fascinating next year.
Absolutely. We certainly are at the very beginning of this because companies and corporates are beginning to understand the utility of having a blockchain for their internal operations. But I think more importantly, seeing the value of Bitcoin as a reserve asset on their balance sheet. Look, you've seen what MicroStrategy has done since August of 2020. It has purchased Bitcoin using issued debt. It's levered up in order to purchase Bitcoin, and then it has issued more equity, rinse and repeat. And this MicroStrategy strategy, if you will, of using Bitcoin as their primary treasury reserve asset has caused its stock price to more than 10x. And now you're starting to see imitators. You're starting to see people like Semler Scientific and other non-public entities, other private companies begin incorporating Bitcoin onto their balance sheet. And so while there's a great deal of utility for AI and blockchain when it comes to integrating that into corporate functions, I do believe that the real killer app of Bitcoin and other things out there is the value it holds as a reserve asset, right? The outsized returns it provides in an environment such as this one, and truly in any environment, right? Bitcoin invented absolute scarcity, but it also invented digital ownership. And so the ability to not just have an absolutely scarce slice of the pie to preserve the value of your balance sheet, but also leverage that balance sheet in order to provide returns for investors. It really is Bitcoin's future killer app. I do think that over the next year and over the next half decade as well, Bitcoin becoming a treasury reserve asset is going to become much more mainstream as people see the value in it from people like MicroStrategy, Semler Scientific, and others. And I do think that the evolution of AI and the integration of AI into day-to-day functionality is going to drive that shift as well.
Yeah, I mean, I know you don't want to give any financial advice here, but have we missed any of these rallies? I mean, is it still an opportunity to jump in? Is it just Bitcoin? Is it just Ethereum? Are you looking at altcoins? Where's the opportunity this year?
Absolutely. So I would take a look at something like ETH BTC in order to gauge whether or not these altcoins are kind of a buy or not. But more importantly, what the market's sentiment toward these alternative currencies are. And if you take a look at the ETH BTC pair, it actually dropped below this critical psychological level, 0.04. Now it's trading at 0.39 rather. And one thing of note, Jeremy, and for the viewers, is that this is the first cycle where Ethereum is not outperforming Bitcoin. It is not rising relative to Bitcoin. The the ratio of Ethereum to Bitcoin has been in this downtrend. And so if price is truth, which it is, that suggests to me that investors are more wary of other assets like Ethereum, like Solana, like these other cryptocurrencies, and more seeing the value of a truly decentralized protocol like Bitcoin offers. That's also corroborated by the fact that the Bitcoin ETFs have had record-breaking inflows when they launched at the start of the year, and the Ethereum ETFs, frankly, their launch was quite disappointing, according to Eric Balchunas and James Seifert, the ETF analysts over at Bloomberg. And so you look at the disappointing launch of Ethereum relative to Bitcoin, it suggests that institutions want a piece of the pie when it comes to Bitcoin, not necessarily Ethereum. And that's corroborated further by the price action in both of the spot markets, Ethereum declining relative to Bitcoin. And so frankly, I think if we're talking, this global easing cycle that's commencing, this massive wave of monetary liquidity that's coming onto the table, I think more investors are not just recognizing Bitcoin as a solution, but more institutions are recognizing Bitcoin as a solution as well. And so just judging by the price and the ETF inflows, that suggests to me the value here is an absolute scarcity. So the value here is Bitcoin.
Yeah, interesting. And at these levels, Joe, before I let you go, at these levels, I mean, how high are we going to go before the end of the year? It seems like we're setting up for a nice little run here. What's your outlook? What's the projections there?
It does, absolutely. So ceteris paribus, as long as these conditions hold that I just discussed, the global easing cycle being underway, monetary liquidity global liquidity continuing to expand, and the U.S. economy remaining strong and robust and resilient, then I think Bitcoin could certainly go as high as 90K before the end of the year is through. If you take a look at Bitcoin's correlation with global M2 money supply, obviously not the best gauge for money supply, but certainly one of the more popular measures of it, it seems that Bitcoin lags behind M2 by about 70 days. And if you overlay both of them with one another, global M2 has really taken off like a rocket ship. And if you extrapolate that out, you lag Bitcoin behind by about 70 days, you're looking at a price target of about $90,000 before the end of the year. Now, of course, not financial advice, and there are a great deal of other factors that play into it. But I think the extremely favorable macro backdrop coupled with Bitcoin's own native strength, I think you see Bitcoin rally very hard into Q4.
Yeah, institutions are certainly watching. All right, Joe Consorti, head of growth at Theya Bitcoin, joining us today. Thanks for this, Joe. I appreciate it. I think we've got into some good areas of discussion with lots to come this year. Let's see if we can get to that 90,000.
Let's see. Thanks again, Jeremy.
Appreciate it. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for watching. We got great content coming up all week long. Lots of economic data to break into too. Stay tuned, hit like, hit subscribe. We'll see you next time.